What's going on, everybody? Chef here. Welcome back to the channel. CPI coming in yesterday morning hotter than expected, only for the market to see its fifth largest intraday move to date in history. Okay, bouncing off that 350 area, ripping all the way up to almost 368 on the SPY. It was about a 19-point swing. A lot of people really got caught trying to predict more downside. Now, in this video, I want to go over two specific things as it relates to yesterday. One being that really important 350 level, how it correlates all the way back, okay, to a very strong support from August and September of 2020. All right, I also want to talk about how a lot of people were predicting really just to see further downside. I know I had a little bit of bias and I got caught really early on. We'll talk a little bit about that. I've mentioned numerous times in my video, when one side gets crowded, you really need to be able to flip your bias. We're going to talk about that. And then also finish it off with big banks kicking off with Q3 earnings. Now, some of them did report, okay, beats on revenue and the fact that their revenue has increased due to natural, interest rates rising. However, it was their guidance and their really bleak outlook for the future. We're going to cover everything. So let's get right into it. First off, Wednesday we closed about 356 on SPY. And as you can see, after moving all the way down to 348, okay, pre-market, and a high of 371, okay, earlier this morning, here we are back at ground zero. Okay, now if you take a look at this move, all right, and I'll be honest, I got caught, my pants down to the downside, which is okay. I talk about this all the time. All right, you need to really be able to flip your bias quickly. A lot of people will say do not trade with bias, and while that can be very good advice, just remember we are humans by nature. Okay, and naturally we do have our strong feelings, our opinions, which is also known as bias. The important thing is to, when you see the price action moving against your bias, to admit defeat, take the loss, and move on. Okay, so I had opened up some SPY puts very early on after the market opens. Reason being for that is because when you look back to what happened last CPI, and I'll zoom in for everybody, we saw that big move down pre-market and it carried into the market open pretty much all day long. Okay, so a lot of people, including myself, were expecting something similar with that, especially because this was another one where, I think a lot of people really didn't think we were going to come in, much hotter. Okay, it was only, 0.1%, but like I said, the market reacted in a very strong manner. We also did see a little bit similar of a setup where it was that grind, that slow grind, okay, until the release, and then it was just a massive drop. Luckily, okay, you're able to cut those losses very quickly. We rode SPY, QQQ calls, and Microsoft was actually the biggest winner. Microsoft, those contracts moved very, very well. Okay, unfortunately, I did take a big loss in the morning that I was able to really not capture a huge part of the move. Okay, I'm human just like everybody else, but I was able to kind of recover, got myself back to green, and wanted to comfortably kind of relax for the rest of the day. But here we are. That brings us to today. Now, all over Twitter, everybody just became bullish again. Okay, it really seems like everybody's just the sentiment is always just late to the game, and I talk about this all the time. Now, you don't always want to play the opposite side, but you want to be very cautious when everybody is crowding to one side, and everybody became bearish. Okay, right, all at this 350, and everybody was back bullish again. We're gonna get a continuation. Okay, we really did hold support. We had that break right here, as you can see, that 364 level, and it's really just been a slow bleed ever since then. Okay, so let's talk a little bit about first why we bounced off that 350 level. I'm going to go out to a weekly chart here for you guys, and if you can see this massive consolidation area, which goes all the way back to August to about actually November, okay, of 2020. We broke through those COVID highs, kind of consolidated a little bit, it bounced back off, consolidated again, finally broke through that. Okay, seeing that this was once pretty strong resistance. Okay, we had pretty much about two to three rejections, and that's over on a weekly chart before we finally broke through that. Expect buyers to come in very heavily. Now, I had some long dated puts, and I did close out a majority of them that were dated for November and December, seeing a massive move all the way down from that 408 area down to 350, it's time to capitalize and start to lock in some profits, especially after the big move we did have pre-market. So expect this area to have a lot of action going forward. Okay, now when you look at the weekly charts where we are setting up on SPY as of right now, we still do have a little bit of time before this closes. Okay, last week it was a very, very bearish candle. If you look at this chart yesterday, it was setting up to be a very bullish candle, just really just tearing up both sides with no clear direction. We'll see exactly how this candle closes, and I'll make another video talking about next week. Okay, but let's take a look at what came in hot for CPI, and really why this is kind of expected just to carry on. So, gas prices are slowly increasing. We're getting into winter. I've talked about this numerous times. All right, you look at oil prices in a prominent city near where I am. We're sitting at about 552 a gallon. Okay, if you're heating your home with oil. All right, and obviously that varies depending on where you are in around the country. Naturally, Connecticut still does have a lot of oil. It's a little bit older, of a state, and has a lot of older towns that still don't have natural gas piped to them as of late. Okay, but 552 is a very high. Like I said, it was about that 380 range just about 6 weeks ago. All right, rent increases according to Redfin were 9% month over month. All right, you take a look at the overall shelter showing in September, still very high. And obviously, this is the biggest weighted sector when it comes to CPI. Now, you do have home prices that are coming down a little bit. However, rent is still, staying high and continuing to increase. It's kind of a weird pendulum that we're in, okay? Even though home prices are coming down, you would think that overall shelter would be decreasing, but it actually puts more demand on the rent. All right, so home prices are not coming down enough with the basically how fast interest rates are rising. Therefore, your overall monthly payment is going to be much higher than it was. To break that down in very simpler terms, okay, a $500,000 home at 3% interest, your average, okay, mortgage, just principal and interest price will be about $2,500. In order to get that same $2,500 price, okay, per month, all right, what you're paying for just your mortgage, principal, and interest, okay, at 7%, the home price is only going to be about $340,000. Okay, so your average home price hasn't gone from 500 down to 340. All right, to make that similar monthly payment, so you're seeing much higher, okay, demand for rents, just because naturally people are like, listen, I can't afford to buy a home, or I can't afford to buy the home I once previously wanted before interest rates started to rise really, really high, putting a lot more demand on rent. Right, so rent I still expect to really continue to rise over the next coming months. And especially you do have energy, which is really at that tight spot right now. The strategic reserves that the 1 million barrels a day that they're going to be released is going to end in less than a month, just after midterm election. Okay, we've talked about this, so just keep that keep that in mind. We're hanging around that 8.2%. Now let's take a look at what happened today. Now, not only did everything I said at the beginning of this video, just the fact of watching market makers kind of just shred people, unfortunately, and it's not just retail investors, it's also big funds. We watched, I use Cheddar Flow for options flow. You've seen some massive orders, and you could just see they're getting shredded. Now, some of them are hedge positions. Obviously, institutions may play a bigger role, but trust me, it is not just retail. It's a lot of people are getting shredded on the side. So, but let's take a look at the bank earnings, and this is very important. A couple of things I want to highlight just to wrap up this video. Okay, capital markets did not approve in Q3, with no sign of improvement ahead, significantly reducing investment banking. Okay, is what a research director, Kenneth Leon, had stated. He also said a loan volume will weaken into a 2023 recession, really kind of confirming that. He also predicts fourth quarter consensus estimates in 2023 outlooks will lower even further. All right, now you did have some earnings, like I said, did have a slight revenue drop. Wells Fargo, a little bit of a beat on from a couple of the banks as well when it comes to the interest side, but their investment banking has severely decreased. And it's more importantly, it's the outlook. All right, we've talked about this over the past few quarters, that it's not all about the numbers as of right now. It's, listen, what can you deliver us, in the coming ahead? So this is going to be a very good indication for the potential earnings up ahead. Big tech will eventually, kick it off, and obviously that's when you could see some wild changes. Now, one thing I will mention before I wrap up this video, pay attention to this. AMD did this previously. What companies will start to do before they report their earnings is they'll actually change guidance ahead, and they'll say, listen, before our earnings come out, we already just want to say that we're already going to change our guidance from what we originally predicted for the following year, the following quarter, and so forth, we're already going to change it. And they do that to soften the blow. So if you start to see that, like I said, just expect things to change and we're going to see more room to the downside. Now, I said this for a long time and I'm going to say it again because my father, my father texted me yesterday morning and, back in that August time frame when he was like, "Man, the market's moving to the upside. Did we hit bottom?" And I said, "Listen, 350 on SPY." I said that to everybody inside the group. We eventually did hit that 350. So now things really have to adjust, okay? But before I can kind of really see if we see any more downside. And in one sense, on a macro aspect, we're clearly not, have not seen the bottom because, like I said, the macro hasn't changed from a chart aspect and where we move over the next few weeks. Well, like I said, there was a lot of demand that did come in around that 350 area. All right, if we test that again and we see a very similar or even close to similar demand, okay, that we had saw yesterday, then you can expect a solid, little rally to the upside. If tech continues to change their guidance going forward and we see poor earnings, then like I said, we've got plenty of room to the downside. So continue to prepare, plan. Like I said, once we get over to that 335 will probably be our next level if we can break through that 348, 350 that we see up in here. And guys, that's it for this video. I'll see you in the next one.